This is the big question for you. Is getting a financial advisor the answer for you? Well, I'm gonna give the financial advisor answer. It depends. Now, the truth is, do you really need a financial advisor? Well, if you've been sold on the idea that someone should always have an advisor, you'll wanna stick around to see if that's really the best thing for you. So here's how you can actually decide whether a financial advisor is right for you. One, if you have less than $1 million, you don't need a financial advisor. I know this is gonna be very debatable for a lot of people, but hear me out, okay? If you're gonna actually have a financial advisor, and I'm assuming you're gonna be investing in mutual funds, because really that's all a financial advisor is gonna offer you, right? If you don't have that much money in there, $1 million, really, you're gonna be paying too much in fees if it's less than $1 million. Because here's the thing, you're gonna be paying usually at least 1% to fees. So if you have $50,000, you pay 1%, that's only $500 a year. But I'll tell you, from being a financial advisor myself over 20 years ago, and hearing the chatter between financial advisors, they really don't want your $50,000. This is why most advisors will usually require a minimum of at least $250,000 even to work with them. Why? Because if they make 1%, they want to make at least $2,500 a year to pretty much just tell you every year, you're good, keep going, put in more money. And that's really what financial advisors do. Even though they do their whole little process, and I know I was taught that process, doing our annual reviews and showing you the progress and where it could go. Really what I'm doing is just reselling you on the same crap over and over, even though I didn't do anything to make you that money, right? But that's what financial advisors do. They're gonna try to convince you that you need to do more. But if you have over $1 million and there's a lot to manage there, maybe a lot of moving parts, a financial advisor might be useful, all right? So I'm not saying the financial advisors aren't useful, but definitely if you have less than $1 million, it's just not that complex of a situation for you to need someone to sell you on more crap, okay? That's where it's really leading me to my second point here, is that financial advisors are really just salesmen in suits, right? Or salespeople in suits. They just offer you really two options, mutual funds and insurance. That's it. Let's be honest, okay? Financial advisors, they really just offer Mexican food. Now, again, I love a good Mexican food. I love that stuff, right? But have you ever noticed when you look at the ingredients of Mexican food, especially when you look at a menu, you look at a burrito, right? And what are the ingredients? You got like their meat, beans, cheese, lettuce, maybe tomatoes, salsa, things like that, right? In a tortilla. That's the taco. What's a burrito? It's a taco folded up, right? And what's a quesadilla? It's a taco on its side melted together, right? What's an enchilada? It's the same thing wrapped up, but then you smother a bunch of crap on it, right? And some sauce, and you call it enchilada sauce. You're like, oh, it's an enchilada now. It's the same ingredients. It's the same thing, just repackaged you in different ways depending on what your mood is in. But it's not like you're getting different food every time. It's actually brilliant if you think about it. Well, financial advisors, that's what they do too. It's been such brilliant marketing that's been done to you for the last 4 decades or so, that financial advisor really comes strong onto the scene since the late 70s. That these companies are convinced you that that is the only option. That when you think investing, you think synonymous with stock markets. I mean, that's brilliant brainwashing. That's brilliant marketing to get you to believe that's what all investing is that I put my money in my 401k. I put my money in those mutual funds. I put my money in those annuities or those insurance products or whatever it might be. They're really just salespeople. And I first learned this myself as a financial advisor. It took me a few years because I remember there was one time, there's a guy that came to our office to train, and he taught us about the stock market and how it all works. And when he started talking to all his financial advisors, there's over 50 of us in a room. He even showed us the example. He said, guys, what if you have $100,000 and you lose 50% in the market? Say the market crashes and you lose 50%. How much money of your $100,000 do you have now? And we all said $50,000, right? Because we're math geniuses. We know how to cut in half $100,000. And he says, okay, guys, so what's the rate of return you need to get back to 100,000 again? And we all said, well, if you lost 50%, you need 50%. And we all said that because, again, we're math geniuses. And he says, guys, you're wrong. It's not 50% because 50% of 50,000 is only $25,000. So your 50 only became 75,000. You're still 25,000 short. You're not to 100,000 yet. Guys, you actually need 100% rate of return to get back to where you were before. So even though you lost 50, you need 100 the next year to break even. He says, guys, have you ever thought about the average rate of return on that? He says, look at it. He's like 100 minus 50 is 50 divided by 2 years, and that gives you a 25% average rate of return, even though your actual return was 0. You guys get this? This is why financial advisors always say, here's my average rate of return. Well, this blew our minds. Remember, there's over 50 of us, and we all got this question wrong when we were asked it. He helped us see the light. And the funny thing is that he was actually saying, well, here's why the stock market has been crazy. This was after Y2K, right? This is after the crash going from 2000 to 2002, and it was starting to come back up in 2003. But people were burned out from the market losses, especially if they were in tech stocks, because tech was horrible. It's kind of like it was in another bubble, kind of like it is now. So he says, guys, this is why you want to offer this option to these people that are scared of the market. And it was like a fixed option or an indexed option. By the way, have you ever heard people talk about indexed annuities or indexed universal life? That's when it got popular. That's when we started offering it early on because they offered it more. Financial companies did because people were scared to get market swings. They were scared to get burned again, which they did again in the Great Recession, right? So that's why that came out. And I remember I actually chased that guy out into the parking lot when he was done. I went out to the parking lot and I asked him, I said, listen, why shouldn't we all be offering these index things? Why shouldn't we just get people out of the markets? He says, listen, I can tell you're in your 20s, you're young. You can afford to take risks because the truth is you'll make more money in the stock market over time. You're willing to take higher risks, so it's okay. This is just for people that are scared of the markets. And I'm like, yeah, but we've already seen the proof. Like from 1995 to 2005, everybody had more money despite the roaring 90s that made a ton of money in the stock market. You would have been better off not to have money in the market because of the downs too. He's like, no, you should just take the high risks. You're young, you can handle it. That's when I realized something, guys. I was a salesman in a suit. I was just offering crap. I was offering that Mexican food. He was just trying to give me another option to sell people when they had an objection, right? So that we can basically fit these little round holes, or like your little everything bagels that just sucks it all in, right? These little holes, they want you to suck you in and be able to get into those products. That's all it was. I was just offering the same thing for everybody. How can we fit everybody into our little tiny hole? Or narrow-minded hole, right? That's the problem, guys. You do not want to get suckered into that. So again, I know financial advisors have good hearts and good intentions, because I did too. But we're taught and trained by financial companies to sell you what the financial companies want, not because it's in your best interest. So just understand this, is that if you're trying to decide about having a financial advisor, know that they're only going to offer you what they can sell you legally. They can't sell you stuff outside of that. If you ask them, should I invest in real estate? Guess what they're going to say? Now, a good one might say, well, it's a good option, but you should be diversified. You should put your money over here too, with me, because that's what they get paid on. They don't get paid to sell you real estate. Just like a real estate broker won't tell you to buy stocks because they don't get paid to tell you to buy stocks, right? Unless they're a real estate broker that's also a financial advisor, who's also an attorney, who's also an accountant, the master, doing the jack of all trades, master at none. Maybe there's that person there, right? I have met that one person actually one time. But for the most part, guys, they're not going to tell you to do something that they can't sell you. This is why getting a financial mentor could be much better for getting you where you want to go. Even if you don't have $1 million, having a mentor can actually get you to that $1 million and beyond mark much faster. Now, when you're picking a mentor, pick somebody who's been there, done that, and still doing it today, right? You want somebody who's been there, done that, and doing it today. Why? Because first, you don't want the blind leading the blind. I know from my own personal experience, if you were to ask a financial advisor to be honest with you, if they could actually quit their career right now, take no more commissions, and only live on their mutual funds, do they feel 100% confident they can do that for the rest of their life, being fully honest with themselves and what they know about the stock market, assuming they know anything about the stock market? You'll be hard pressed to find anybody who can say yes to that answer. So why are we trying to follow them to that? We can't even find retirees that feel confident about that. We can't even find people that have over $1 million in the stock market still feeling confident that they can even retire, right? That's why 35% of millionaires say that's not enough, because they can't live on enough based on the traditional financial model. So I'm not a fan of mutual funds. I'm not saying you can't do them. I'm not being an investment advisor for you or anything like that. But I will say this, you want to find somebody who actually has the kind of, that's able to accomplish what you want to accomplish in life. If you want passive income, find somebody who's done passive income. You want to have a better business, you find somebody who can actually has done that before in their own business and helped other people do it too. Find a mentor that's not only just help themselves, but can even help other people and help be a guide for you as well. Help you navigate those frightening waters of investing, especially when really there's a lot of crazy stuff out there and you can get burned easily if you're not doing it right. So my advice to you is, even if you don't qualify to get an advisor, find a mentor. And even if you have over $1 million, ask yourself, do I want to be put into that box with an advisor? Maybe you do. Maybe you have a mentor and maybe you have a financial advisor too to sell you that junk, right? Whatever it might be, they might manage your accounts. Great. You can have a team to help you do that. So guys, that's what my recommendation is for you, is that if you've got that money or you want to be able to have a financial advisor in your life, go more for the mentor versus the advisor. Mentors have been there, done that. Advisors just regurgitate stuff that they're taught to sell you. Okay, if you guys like this video, please like and subscribe, even comment below, but also check out this next video about why this is the answer series.